Hello. Can you all hear me?
Yes.
Okay. Good evening, everyone. My name is Luis Cueva, and I would like to welcome you all to this call on how we can make tax time a better time. Very excited with this special call and our special guest, Sandy Botkin, we have coming on very soon. We have a very broad audience today from all over the U.S. and even our friends out in Canada. So welcome, everybody. So with this big, diverse group, we may have some busy mothers working the 9 to 5, some college students trying to figure out their next step, professional doctors, attorneys, business owners, real estate agents, and even athletes. But one thing we all have in common is we want to find effective ways and proper ways to lower our taxes. So with that said, I can definitely say you're in for a great treat, and we are fortunate to be learning from our special guest. So just to give you a little background about myself, I'm a third-generation tax preparer, and have been helping others for almost 20 years now. I know I'm kind of aging myself there, but it's okay. My grandfather started an accounting and tax business out in California, and when my family came out to the U.S., my dad started his accounting education and began to help out my grandfather. And from there, I decided to join in on the family business myself and follow in their footsteps. So years ago, I began to study and apply what I learned from Sandy Botkin and what he will be showing us tonight. So can think of him as kind of like the Steve Jobs was to Apple, or sort of what Donald Trump is to business. So that's a great thing because we have him, and he will be sharing lots of the great information that will help us. Later on, after Sandy is done with his presentation and his info, you'll be hearing from Tomas Artica, which is a good friend of mine, and someone who has begun to apply what he has learned from Sandy, and it has saved him thousands. This is a gentleman that is very interesting. 7 years ago, he actually decided to start his own home-based business and has been able to generate a successful and consistent residual income, and he will be sharing his story shortly. Okay, so I'm very excited. I got my notepad ready here. I'm going to be taking notes, so I don't want to take too much more time. So let me tell you a little bit about Sandy Botkin. He is a CPA, tax attorney. Sandy has been training millions of small businesses on how to get their taxes down to the legal limit for over 30 years now. He teaches tax reduction at Donald Trump and Tony Robbins' Wealth Seminar, and is a best-selling author of the book I own and recommend called Lower Your Taxes Big Time, and several other best-selling books, including his last one, The Cheap Financial Freedom Big Time. Sandy is a frequent guest tax expert on NBC, ABC, Fox, and even CNN. As a young man, Sandy worked for the IRS, training their corporate tax lawyer before joining a Big 5 accounting firm. After 3 years, he left that firm to start his own company. His sole passion now is to educate small business people about the huge tax breaks available to them, and to do it in a fun, entertaining way. He has earned the reputation as #1 tax expert for small businesses and home-based businesses owners in North America. So let me turn it over to the man himself, Sandy Botkin.
Well, thank you. I really appreciate it. That was wonderful. Welcome, everybody. And a couple things. I'm going to be going very quickly, so you're going to want to take some notes. This is sort of a 30,000-foot overview of what's in my books and what's in my materials. And I want to tell you how honored I am to be here, by the way. I mean, I've done a lot of work with USANA, and a really fine company. But I'm also very, very pleased to be speaking to you, self-employed individuals. I mean, heck, my parents were self-employed. I'm self-employed. So I really admire the entrepreneurial mentality of trying to make a lot of money and willing to take a little more risk. As I said, you're going to want to take a lot of notes. I'm going to move very quickly. This is a fast-paced seminar. And I'm going to be saying some surprising things. And so I think I want to go over my background as well as to why I'm able to say what I'm saying, so you'll understand I know what I'm talking about. But first, I have a question I want to ask you. And I'll be asking actually a number of questions. And the first one is, have you ever had a situation where you were charged on a credit card more than you expected? Or maybe you were charged for something you didn't even buy. You ever had that happen to you? Happened to me. I was in Florence, Italy with my wife, and we had about a $100 dinner with wine and everything. And I got home, and I had the $100 charge, except I was charged twice for the exact same meal. I was irate. I immediately demanded a refund. My question to you is, when that happened to you, what did you do? Did you just pay it? Or did you demand a refund like I did? And how did you feel? Well, I want you to hold on to that feeling because I'm about to make it a lot worse. What if I were to tell you that you are overpaying your taxes to the tune of thousands every single year? In fact, it probably averages about $50 a day. You're actually burning a $50 bill not knowing this information. Would you want to know about it? Of course you would. You know, one thing about taxes, most people don't realize they spend more time in planning their vacation than taxes. And yet, you're going to spend more money on taxes than food, housing, transportation, and clothing combined. The good news is I'm going to show you that there's a very easy solution to prevent that from overpaying your taxes and to give you that peace of mind of not having to worry about an IRS or Canada Revenue Agent audit again. Imagine that, to be in great shape so you don't have to worry about it. Now, I'm going to be saying some surprising things, so I want to give you a little background about why I am qualified to teach you what I'm about to teach you. First of all, I'm a CPA. I'm a tax attorney here in the United States. I'm a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me head rodents. I've been lecturing for over a quarter of a century on tax and financial matters with the Tax Reduction Institute. I am a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author, as was mentioned by Liz, of Lower Your Taxes Big Time. If everybody would mute their phones, Liz and Thomas, everybody, I really need you to mute it. The book that's garnered a lot of reviews called Achieve Financial Freedom Big Time. And I've been a guest tax expert in a lot of places, Fox, CNN, CBS, and so on. And I'm not saying this to impress you. I just want you to know I know what I'm talking about. Now, here's the first surprising thing. And that is there was a study done, I think at Harvard, about 10, 12 years ago. And they wanted to know what percentage of the population could retire with the same standard of living they had before retirement at age 65. The answer was shocking. The answer was 4%. Only 4% can retire with the same standard of living at age 65. What does that mean? That means 96% of everybody had to either continue working, live on some form of charity, or reduce their standard of living. And that was a 12-year-old study. That was during a time when companies gave out pensions. I was just reading today in the New York Times, and they had an article in the Globe and Mail in Canada, that only 20% of those companies now are giving pensions. So this number is a lot worse. How would you like to be in that top 4%? Pretty much guaranteed. If you'll listen to me, I'll get you there. And the way we're going to do it is we're going to change all this today by giving you some amazing tax breaks, some of which I bet you never even knew about. And we're going to talk about how to get meticulous records. So I'm going to increase your deductions and reduce your chance of audit with meticulous records, believe it or not. Now, I have found that most self-employed people fall into one of two situations. It's kind of like a dilemma. They're either not taking all the deductions they should be taking, or they're taking more deductions, maybe not, still not all, but they don't have the right documentation, and they're risking all kinds of penalties and interest. It's a very serious problem. They're rolling the dice. And one of the reasons it's so serious is that if you're self-employed, you have as much as a 700% more likely chance to be audited. So to roll the dice and have that kind of risk is really idiotic, but that's what I'm finding. Also, in tax law in both U.S. and Canada, you are guilty until you prove your innocence. You have that burden of proof. Now, I'm going to say something that's going to sound kind of funny, but it's true. The government is the biggest bookie in North America because they are betting on you big time to succeed, to start a business. And the reason they do that is very simple. Jobs, jobs, and more jobs. And the government has learned something very interesting, and that's true for U.S. and Canada, and that is from small acorns come big trees. For example, Apple Computer didn't start with 200,000 employees. It started out of Steve Wozniak's and Steve Jobs' garage. The big internet giant Amazon started out of Bezos' garage. Mattel out of a garage. Even Microsoft started small. So the government passes good tax laws for you to be in business. And what's interesting is that we have two tax systems in this country, and in Canada too. And when I say that, most people think, oh, sure, one for rich and one for poor, and that is not quite true. There's one to make you poor, and there's one to make you rich. The one to make you poor is designed for employees and self-employed people who don't know the rules. Because if you don't know the rules, or you're an employee, here's the rule: you're taxed on $1. You don't even get that many deductions as an employee, and any deductions you do get as an employee have to exceed a certain threshold in both U.S. and Canada. But if you're self-employed, that's the one to make you rich. You get everything that an employee gets, plus you're taxed on your net income. You get to drink all your deductions before the government gets one dime, and you don't have to exceed any thresholds. It's a tremendous benefit to be self-employed. So the government passes good tax laws that will give you deductions, which will create cash that you never have to pay back. I want you to think about this. They're essentially giving you interest-free financing that you never have to pay back. That's effectively what this is. And a good example is Mary. Mary is an employee, or maybe she's self-employed but doesn't know the rules, same problem. And she has the following expenses. Cell phone, normally not deductible as an employee. She has mortgage interest, which is deductible here in the United States, but not in Canada. If she rents an apartment, then it's not deductible in either country. She has car expense. She drives to work, so she spends money on gas, repairs, insurance, not deductible. She likes to eat out a lot, not deductible. Entertainment, she likes to go out and have fun, movies, golf, plays, not deductible. Mary has medical expenses, which have to exceed a very high threshold. In fact, it's even higher now in the United States than it was a couple years ago. And any other medical expense, any other employee expenses are deductible, but they have to exceed a high threshold. Here's my point. But if Mary is self-employed and knows the rules, portions of these expenses now can become deductible. Same money. She's already spending the money, but now they become deductible. I have coined the name for this. It's called redirected tax dollars. What you're doing is you're converting what was totally non-deductible to now become partially deductible. So let's take an example. Let's say you spend $10,000 in taxes. Wouldn't it be wiser to take some of that same $10,000, money you would pay anyway, and save it by subsidizing your business with it? Where do you think the wiser choice would be? And believe it or not, I emphasize the words are correct. It's your choice. With proper tax planning, you can actually take a significant portion of what you're already paying the government and use it to subsidize your business. And I'm going to show you exactly how to do that. In fact, I'm going to say something that's going to sound kind of surprising. Who are the biggest cheats in North America? Do you know? Because what I'm about to tell you is going to be very surprising. Business owners cheat themselves out of billions in lost deductions. They are out, no question. They are hurting themselves more than anybody else. In fact, it is estimated that small business owners overpay their taxes to the tune of about $150 billion. That's what it be, $1 billion a year, and over 95% didn't think they overpay. Now, why do they overpay? Why do they have these problems? There's really three reasons. One, fear of the IRS or fear of Canada Revenue Agency, which you don't need to have because I'm going to show you how to play within the rules. The second reason is procrastination. You know, it's like an alarm clock. If you don't have something triggering you to wake up, what happens? You don't do it. So you need something triggering you to do the right things. And finally, lack of knowledge. You know, you don't know what you don't know. Now, there's a couple of cash drain myths that I want to share with you. One of them is only 7 words long, and it causes more people to lose money than probably any single financial mistake you're ever going to make. And those 7 words are, my accountant takes care of my taxes. And by the way, I have a similar myth, my spouse takes care of my taxes. If you learn anything, learn this. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these roto-rooter jobs? Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. By the way, Jaguars were interesting. They were the only cars in the world that actually had more vertical mileage than horizontal. I'll let you think about it. The point is, your accountants are essential. But if you don't have the right documentation, if you don't know what to do, there's only so much they can do for you. It's got to be a team effort. Does that make sense? Now, some of you may have seen me in some of these big mega events with Donald Trump and General Schwarzkopf and Tony Robbins and his other events. And I had a guy come up to me and said, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. I get a refund every year. He didn't realize he's getting back his own money. And the problem was he wasn't even getting it all back. I actually did an analysis of somebody who makes $50,000 a year of net taxable income. This is net of all your deductions and exemptions and so on. On $50,000, they pay roughly $12,917. Now, withholding or estimated tax tends to be more than what you owe in taxes, and there's more for a couple of reasons. One, the government wants to make sure they get their money, but two, when you get a refund, don't you feel better? So even though this person's getting a refund, they're not getting all their money back. They're still leaving $12,917. This translates to 25.8% of their net taxable income is being paid in taxes. And we're not talking about Donald Trump here, folks. We're talking about a hardworking single individual making $50,000 a year of net taxable income. Somebody makes $100,000 a year of net taxable income, pays 32.4%, and somebody makes $250,000 of net taxable income, pays a whopping 37.7%. So you're paying a lot in taxes. You may not realize it, but you are. Now, here's another myth. I have a home-based business. How is that different in terms of the deductions and fringe benefits that a brick-and-mortar business or even a Fortune 500 company can provide for their employees? Answer, none. You get exactly the same tax advantages that a Fortune 500 company provides. Exactly the same. And what's interesting is if you go to get my book, Lower Your Taxes Big Time, that Luis talked about, in that book is 130 pages of fringe benefits. I'll bet you 128 of them apply to everybody on this call. It's the same deductions, same benefits, whether you are a Fortune 500 company or a sole proprietor or a home-based business. Now, here's another huge myth. What if I work my USADA business part-time or any business part-time? The answer, you get exactly the same benefits whether you work full-time or part-time. It doesn't matter. Now, here's something that's really a big myth, and I don't know where this came from. Sandy, I'm not making any money yet. So why do I need to worry about tax planning? Don't they have to worry about it if I make $200,000 or $300,000 a year? I want everyone to write something down because for some reason this is a huge myth. The amount of income you make is immaterial for tax planning to benefit you. The amount of income you make is immaterial for tax planning to benefit you. And so it doesn't matter whether you make $300,000 or zero, and I'll explain why. Remember I said the government is the biggest bookie in North America? Well, they subsidize your business. They want you to succeed, so they subsidize you. And they subsidize you in three ways. The first way is that if your business generates a loss, that loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 a year in a job. You're working your business part-time, so you have a $10,000 loss this year. You pay taxes on the net, $40,000. Now let's say that loss exceeds your whole income for the year. You're a single parent and it exceeds the whole income. Here's the second way they subsidize you. You carry back all business losses 2 years and actually get a refund from the federal and state government for the last 2 years of taxes that you pay. You actually get a check. For you Canadians, you get to carry it back 3 years. You actually get a better deal. And once you carry back all those losses and you still have some losses left over, no problem. Or if you wiped out all the income and tax you paid in the last 2 years, then they subsidize you in a third way where you get to carry forward all business losses up to 20 years and offset the next 20 years of earnings. So you never lose a properly documented business deduction. All the government wants in order to subsidize you is to have you work your business like a business and not like a hobby, which basically means try and make money. You don't have to make money, but try to make money. That's the bottom line. Now, here's another interesting question. Would you rather receive a $17,000 raise every year for the next 10 years, or does you actually get a check, or if I can somehow wave my magic wand, save you $10,000 in taxes every year for 10 years? Which would you take? Believe it or not, if you said that $17,000, you'd be wrong. Because by the time you pay tax on 17, you're left with less than $10,000. You know, I get people asking me all the time, how do I get $1,000? All I want to make is $1,000 a month at least for my business. How would you like to make an extra, what's your chance of making $1,000 guaranteed a month, extra, above and beyond what you're making now? Maybe, maybe not. Probably not guaranteed. What if I were to guarantee it, or just about guarantee it? If you generate $18,000 in deductions after taxes, let's say you're in the average 40% tax bracket, the net on those $18,000 in deductions, the tax savings, is equal to the tax savings of approximately $1,000 a month after taxes. Same thing. A lot of people don't translate deductions into money, but it really can be. It's indirectly is form of money. $18,000 in deductions in the 40% bracket equals about $1,000 a month gross before taxes. So congratulate yourself. I'm about to give you $1,000 a month extra in your pocket. Now, I think I paid like $3.49 for gas for a gallon. How would you like to get gas for the equivalent of free? Would you like that? Watch this, because when you write off your car, that's effectively what you're doing. There are two methods in the U.S. to write off a car. In Canada, you got one method. You can use the IRS method or the actual method. In Canada, you just get the actual. Now, the IRS is the more conservative method, so we'll use the more conservative approach. IRS gives you, in 2014, 56 cents a mile for every mile you drive for business. And by the way, who has the burden of proof on how many miles we drive for business? Does the government or do we? And the answer is we do. And how do we do it? From a tax tracker. Number two, in the U.S., IRS gives you 23.5 cents a mile for medical and moving. Every time you go to the doctor, every time you take your kids to the dentist, you should be claiming 23 cents a mile round trip. If you're not doing it, you're overpaying your taxes. You're burning part of that $50 a day. Now, here's something that a lot of people miss, and I don't know why that is. IRS also gives you 14 cents a mile for charity. I have a friend of mine who's on his board of directors of an alumni association. Every time he goes to a meeting, he should be claiming 14 cents a mile. Is he doing it? No. In my neighborhood, a lot of moms drive their daughters to sell Girl Scout cookies. Those moms should be claiming 14 cents a mile. You think they're doing it? No. They're overpaying their taxes. All right, so how do you get gas for free? Let's assume tomorrow you drive 20 miles for business. IRS gives you 56 cents a mile for a total of an $11.20 deduction. 20 times 56 and a half. 20 times 56 is $11.20. Now, a deduction is not cash. You have to multiply the deduction by your tax bracket. And by the way, just to get an idea of what tax bracket is not what you pay overall to the government. That is not the case. Tax bracket is what you pay on the last dollar you make to the federal and state government, or federal and provincial governments. It includes federal tax, state tax, Social Security, and Medicare. In Canada, it's federal, provincial, and CPP. The average person is in the 33% tax bracket. It could be as high as 54, by the way, but the average is 33. So if you multiply that 33% by the $11.20 deduction, this results in a physical cash savings of $3.69 on that $11.20 deduction. Here's my point. If gas is $3.50 a gallon and you get 20 miles to the gallon, not only is gas free, you're actually making, by writing off your car correctly, 19 cents a gallon. You're actually making a profit. And that was the IRS method, which is the more conservative approach. The actual method usually is better. Now, what is the actual method in both the U.S. and Canada? That's where you take a percentage of your gas, your oil, your insurance, your wash, wax, depreciation, and so on, based on your business use to your total use. So let's say your business mileage was 20,000 miles. Your total mileage was 40,000. Therefore, 50% of all these numbers are deductible. And by the way, I want to mention something. The IRS method is in lieu of gas, oil, insurance, wash, wax, depreciation. But there are some things you get in addition to the IRS method that even many accountants didn't know. One, you can deduct the business portion of your interest. So if you use your car 80% for business, 80% of the interest is deductible in addition to all of these things, or the IRS method. Also, you can deduct the business portion of any sales tax you pay. I have a friend of mine who didn't do this, didn't know this. He looked at his tax return. I want everybody who uses the IRS method to look at your tax return and make sure your accountant gave you a deduction for the interest and sales tax to the extent you use it for business. If not, you can file amended tax returns for as long as you've been in business for up to 3 years. I know someone who did this and is getting back over $6,000 refund from the government. This is federal and state, by the way. This is no small deal. This is a big deal that a lot of accountants have missed. So what kinds of documentation do you need? Well, you got to have an odometer log showing the beginning and end year's odometer reading. You've got to have a mileage journal showing your mileage, or kilometers if you're in Canada, for every trip you take. And here's something that a lot of people miss. You have to write down an explanation of the business purpose for every trip you make. This is where a lot of home-based business people fall down. They don't do this, and therefore their deductions are not compliant. That's the problem. Here's a hot tip. You know, there's an old saying in Washington, D.C., where there's a will, there's a lawyer. You know, a lot of times you do personal stuff, like going to a football game or going to your mom's house or taking your kids tutoring. That's not deductible. So here's a tip. Ask yourself, do you have a prospect or an opportunity meeting or a potential distributor or a distributor who lives near that personal stop, like your mom, for example? If so, a substantial part of that trip then to see your mom would be deductible. And by the way, your mom doesn't have to live where you live. Maybe your mom lives in Hawaii or Vancouver, and you can fly out, meet with the distributors, put ads in the paper, and while you're there, see your mom in addition. If you do it correctly, you can also write off that trip as well, even though you're seeing your mom. There's a lot of ways to achieve this. Now, there's a couple vehicles that are big winners in 2014 here in the United States. If you buy a qualifying truck or a qualifying SUV, you get to write off $25,000 of the business use of that vehicle, no matter when you buy it. I don't care if you buy it in January or in December. It doesn't matter. I mean, it doesn't matter whether you pay cash or finance. You still get to write off $25,000 of the business use. Plus, you get regular depreciation on what's left over. So what's a qualifying truck and qualifying SUV? Well, it could be a new or used truck, new or used SUV. Doesn't have to be new, just new to you. Secondly, both of them have to have a gross vehicle weight of over 6,000 pounds, which means carrying weight. And how would you know if you have a gross vehicle weight of over 6,000 pounds? By the way, that's without you in it. You open up the driver's door, and in the door jamb is a little metal plate showing the gross vehicle weight. If it's over 6,000 pounds, you meet the rules. Meet that one rule. Second rule, it's got to have a truck chassis. Whether you're an SUV or a truck, you must have a truck chassis. As long as you meet those two, you qualify. With a truck, you also have to have a 6-foot cargo area and no back seating, where with an SUV, you can't have back seating. That's not a problem. So if you meet these rules, basically the bottom line rule is over 6,000 gross vehicle weight and a truck chassis. And if it's a truck or SUV, new or used, you get to write up to $25,000 off, and that's a really good deal for 2014. If, on the other hand, you buy yourself a nice gas-saving Honda or a Prius, it might take you 15 years to write it off. Okay? All right, let's talk about entertainment. In both U.S. and Canada, the government allows you to write off 50% of your meals and 50% of your entertainment for anyone who's a potential prospect in your business. My question is, who are potential prospects in your business? Are your adult family members? Sure. Can they give you referrals? Sure. How about your next-door neighbor? Can they become customers? Sure. How about your other networkers? I've never met two networkers get together and not talk business. So let me ask you a question. How can you ever have a non-deductible lunch with someone? You basically can't. And if you're not writing off almost every meal you have with someone, I would like to suggest that you are overpaying your taxes. And that's part of that $50 a day that you're ripping up. If you're picking up the tab or you're paying part of the bill, you don't have to pay it all, you're not deducting it, then you are overpaying your taxes because everybody basically is a prospect, other than a spouse. I'll even show you how to do that. Now, what kinds of documentation do you need? First of all, you must have something triggering you to write down the 4 W's and an H. Now, what are the 4 W's and an H? Who? What's their name? What did you discuss? Be specific. Talked about referrals, or talked about a specific product, or talk about the income opportunity. Where? I went to Outback Steakhouse, or I went to Tim Hortons for breakfast. When? How much? By doing this, you will never have to worry about an IRS or Canada Revenue agent again. How will that feel? Have that peace of mind of not having to worry about it. The key is you got to have something triggering you to do these things in a tax tracker or tax organizer. That's the key to kill that procrastination. If you don't have something triggering you like a little birdie, it doesn't happen. And by the way, I get a lot of people who call me up and they say, Mr. Botkin, wait a minute, if I do a lot of entertaining, won't that trigger an audit? First of all, I want to emphasize a couple things. You know, there's a lot of companies that advertise, and they spend a lot of money advertising, like on the Super Bowl or the Olympics. I think you'll agree with me that these companies know that people who watch their ad, not everyone is going to buy their product. So small business doesn't advertise in the Super Bowl. Their form of advertising is viral marketing or word-of-mouth advertising. And it really pays to advertise because, number one, you're promoting your business in pursuit of a profit, and number two, you are offering proof that you're running your business like a business. So the government encourages advertising. They encourages entertaining. And if you're not writing it off, you are overpaying your taxes. It's that simple. Now, there's something called associated entertainment that's found in the Internal Revenue Code, and it's also up in the code in Canada. You probably never heard of it. I want you to write down the word associated entertainment, and I want you to write down the word fun equals fun. See, we don't need better tax laws. We need better explanations. This is where you're playing golf. You're going to the movies. You're going to a play. You're going to a hockey game or a football game. And you're deducting that fund. You're having twice as much fun. Both IRS and Canada says you can write off 50% of your fund as well as 50% of your friend's fund if, and this is not Sandy Botkin talking, this is the regulations talking, if you talk business within the same 24-hour day as the fund. Does that give you enough time? Sure. Now here's the problem. Who has the burden of proof of showing we're talking business within the same 24-hour day? Does the government or do we? And the answer is we do from our tax tracker. That's the key. So let's say I go out with Tomas to his house, we talk business, and 2 hours later we drive to a football game. Is that talking business within the same 24-hour day? Yes. Let's say Tomas and I talk business over lunch, and then he says, okay, Sandy, let's go play golf. We do this right after lunch. Is that talking business within the same 24-hour day? Yes. By the way, for you Canadians, Canada Revenue Agency, one change here, does not allow the deduction for green fees or country club dues. You can't do that in Canada, but you can write off, you can depreciate the golf clubs, you can write off the golf balls, the caddy fees, just not the green fees in Canada. U.S. is you can. All right, what kinds of documentation do you need to write off your fund? You got to have something triggering you to write down the 4 W's and an H. Who, what was discussed, be specific, where, when, how much. If you do this, you'll never have to worry about an IRS or Canada Revenue Agent audit again. You do this in your tax tracker. And by the way, I want to emphasize a couple of things here. All of you have homeowners insurance. Why do you have that? You don't use it every year because if your house burns down or you have a big catastrophe like a tornado or an earthquake or a hurricane and you don't have insurance, it's a disaster. I bet you all have car insurance. Why do you do that? You don't use that every year. In fact, if you did, you'd be suspended because if you don't have it and you get into an accident, it's a disaster. It's a catastrophe. Your tax tracker is your audit insurance against the government. It is what you need to keep the government off your back. And even better than auto insurance, it pays you every single year and it pays you well. And by the way, I have people who ask me all the time, they say, well, Mr. Botkin, you mean to tell me that the IRS or Canada Revenue Agency is going to believe everything I say in my tax tracker? Yes. They have to by regulations unless they can show fraud. Your tax tracker is your audit insurance against IRS and Canada Revenue Agency. It'll keep them off your back. And there are too many people who have been put out of business because they didn't understand that. Now let's talk about a home office. I'll bet you were told that if you claim a home office, it isn't worth it and you'll probably get audited. First of all, there was a study done where we had a large number of people. A friend of mine did the study and found that the actual audits of home office is about the same whether you claim it or don't claim it. In addition, in 1999, Congress liberalized the home office rules. Now, why would Congress, they did a similar thing in Canada, by the way, why would these countries do that if they didn't want you to take the deduction? Think about that. So I'm here to tell you that if you don't have a home office deduction, and you're probably eligible, you are crazy, absolutely crazy, because it's worth thousands. And let me give you an idea of how it works. Let's assume this is your floor plan, and you really have to put out your floor plan to figure out what your square footage is, and you're using one bedroom for business. And we're going to assume that that bedroom represents about 1/8 of your total square feet. In your house, that number could be more, it could be less. I'm just picking a number, okay? Now, what does that mean, 1/8 is used for business? What are the consequences of that? That means 1/8 of the utilities become deductible. By the way, I want to show you something here. You were spending money on utilities anyway, weren't you? But by having a home office, now what was totally non-deductible becomes partially deductible. This is an example of that redirected taxes. 1/8 of your interest becomes business interest to help reduce your Social Security in your business. Now, for you Canadians, you don't normally deduct interest, but by claiming a home office, now you can deduct part of that interest. 1/8 of the property taxes become business taxes. 1/8 of the house can be depreciated. That could be tens of thousands of dollars. By the way, those of you in Canada have a little separate rule. If you do take depreciation, normally you don't pay tax on the sale of your home. But if you do take depreciation, then you have to pay tax on that portion of the home that's your business, that you depreciated. So you have the option of not claiming the depreciation. So see your accountant about that. A lot of times people ask me, well, what happens if I rent an apartment? No problem. 1/8 of the rent is deductible. 1/8 of the maid service, the alarm service, the snow removal, the repairs, the insurance. I mean, we're talking tens of thousands of dollars. This is a big deal. Now, how do we prove we have a home office deduction? I bet you don't know. There are 3 rules you got to meet in both U.S. and Canada. Rule 1, you've got to use an exclusive portion of a room for business. It doesn't have to be a whole room, just an exclusive portion of a room. Now, when I say exclusive, I mean get those cookbooks out of the bookshelf, get those bridge books out of the bookshelf. And how do you prove a part of the room was used exclusively? I mean, you claim the deduction today, but you don't get audited maybe for another 2-3 years. So how do you prove it? I bet you don't know. Here's the answer. Take a picture of your home office. Date the photograph, but do not send the photograph in with your tax return. Keep it. Somebody did that about 30 years ago when I worked for IRS, and in the photograph he was making some undesirable hand and arm gestures. I thought it was funny, but not everyone at IRS has a sense of humor here. So you just take the picture, date, but don't send the photograph in. Keep it in case you get audited. Number 2, that's the first rule. Second rule is you got to work at home regularly for business, and that means at least 45 minutes to an hour or more a day, 4 to 5 days a week. It's much more important to work it regularly than once every 2 weeks for 12 hours, for example. And finally, you have to use your home as your principal place of business. This is a cinch. This is where you do the majority of your management or administrative work from your home office. That's easy. And you don't have another office where you do any administrative work. You meet all 3 rules, got to meet all 3, and you now have a qualified home office deduction, which is worth tens of thousands of dollars. Now, I get a lot of people asking me, Sandy, can I deduct my kids' college education and weddings? And the answer is no. Can I deduct the room and board? No. How about the books? No. How would you like to be able to deduct the equivalent of every single thing I just said, if blessed by the government in both U.S. and Canada? Would you like that? There are 5 ways to do it. Let me give you one of them. It's in my books, actually. Hire your kids in your business. If you were to pay them a reasonable wage, aren't reasonable wages, you pay an assistant in business, as long as it's related, ordinary, necessary to your business. That would be deductible, would it not? Of course. And then if they use that money down the road to pay for their own college, their own room and board, their own books, aren't you in essence getting a deduction for that money? It's the same money, but in one case you went from non-deductible tuition to deductible wages, where they then use that to pay their own tuition later on. Same money. Give me an example of how this works. I hired my daughter, who was majoring in digital design, which is kind of like web design with a little animation. At the end of 2 years, she was eligible for internships. She had sufficient skills. Well, I wanted to get a brand new website. I didn't want to go to these free website deals because they give you garbage. So I went to a good web firm because I had a bunch of bells and whistles that I wanted to put on my site. And they gave me a pretty high quote. So I contacted my daughter and I said, look, can you do my website for something cheaper? She said, sure. I was able to pay her the equivalent of about 2 years of tuition, which she paid for herself, 2 years of room and board, 2 years of books. I saved tens of thousands of dollars by hiring my daughter. If you haven't done that, you are overpaying your taxes. I wasn't exaggerating when I said lack of knowledge or lack of documentation is costing you about a $50 bill every single day of your life. That's what it's costing you in deductions. The key is you got to pay them a reasonable wage for what they do. It's that simple. Now, a couple of things I want to emphasize. As I said, there's a current tax dilemma. People are either not taking the deductions they should be taking. Hopefully I've convinced you of that. Or they're taking more in deductions, but they must not have the right documentation, which I find is mostly the case. Hopefully I've convinced you to start keeping meticulous records and to learn more about tax deductions. I got to tell you, nothing is more lucrative than knowing about tax planning. It is just incredibly lucrative. And by the way, a lot of times people come to me and they go, Mr. Botkin, wait a minute, can I just keep my credit cards instead of a tax organizer? IRS agents and Canada revenue agents love people who think that way. Well, think again, because you need more information than the credit card provides. Just to remind you, you are guilty until you prove your innocence. You have the burden of proof that all your deductions were business related and you're following the rules. The government makes a deal with you. When you sign that tax return, you have a deal made. And the deal is that you will operate your business correctly, like a business, and you will have the right documentation. If you violate that deal, you'll be hit with severe penalties. It's that simple. Now, the key to getting that redirected tax income is to run your business like a business and not like a hobby. And I got a whole video on this, but let me give you a quick overview. Business people work their business at least an hour a day, 4 to 5 days a week. It's much more important to work your business regularly. Business people, if they're not making money, they meet with there's someone who is successful in the business, maybe a trainer or someone in their upline who's successful, and they find out what they've done, and they follow what they do. Business people go to training. You can never get enough training. Business people have accountants. They don't do their own tax return. They have accountants who generate financial statements and go over these statements with them. Again, I want to emphasize, and business people have tax trackers. That's a very important point. Government doesn't care if you're making money. I know it sounds kind of funny to subsidize you. They really don't. All they care about, you're a good bet. They want you you're trying to make money. I mean, think about it. All these businesses that start up in North America, many of them don't make money. You think if they didn't make money, they'd be put out of business if the government made them make money the first year. Many of them don't. So they don't even expect you to make money the first year or two, but they want you to try and make money and to track your expenses according to both IRS and Canada Revenue Agent standards. It's all they want. It's not asking for much. It really isn't. Now, just to remind you, you have as much as a 700% more likely chance of being audited, so you want us to keep the right records. Let me ask you a question. What if you had an accountant or a personal assistant to do all of this for you, to keep your mileage logs for you, to keep all your receipts in a bulletproof way so you never have to worry about losing those receipts no matter what, even if you had a flood, and to keep all those tax notes like for entertainment and travel questions for you? Would you like that? What if you can get this accountant to walk around with you every day, 24 hours a day, 7 days a week, not for minimum wage, but for pennies per day? Pennies. Would you be willing to do that? Let me introduce you to one of the best assistants you'll ever meet. It's called TaxBot. It's a cute little creature. It's got a 4.5-star rating in the App Store. It is completely IRS expense tracking compliant and Canada Revenue Agent compliant. When I designed TaxBot, I want to emphasize something. I grew up in the slide rule generation. We didn't even have calculators. So computers are intimidating to me. So I wanted to design something simple, easy, and fast. You know, one thing I've learned about myself, I can do simple and easy and fast. I can. So this has 2 buttons. That's all it has. Add trip, add expense. That's it. It's a very simple thing. If it's mileage, you add trip. If it's anything else like expense, you add expense. With TaxBot, you simply snap pictures of the receipts, answer simple questions, and you will ensure both IRS and Canada Revenue Agent compliance. So let's take an example. Let's say I want to add an expense. I have a lunch with Tomas or with Luis. I click on Add Expense. You will get a whole category of expenses, which, by the way, are fully editable and fully customizable. One of them happens to be meals. So I click on Meals. The minute you do that, all the tax questions of who, what, when, where, why, how much pop up. All you do is fill that out, and you never have to worry about an audit again. You eliminated procrastination because there it is right in front of you. This works on the iPhone, the Droid, the iPad, the Droid tablet, and the web. And by the way, there's another button here that you might see here. It's called Entity. TaxBot works on up to 3 different businesses and 3 different cars simultaneously, which means that you can use one account. You don't need separate TaxBots for you, one for your spouse, one for your kids, all on one account. You do not need separate TaxBots. Now, in addition to all of this expense tracking, it also has an integrated camera. So you would click on Attach Receipt, take a picture of the receipt, and then save it wirelessly through your phone to the web. So everything gets stored on the web. So if you lose your phone or you buy a new phone, no problem. All that data is saved on the web. You do not lose your data. Now, in addition, TaxBot has an integrated mileage tracker with a GPS system. So this one you're going to like. So forget about those odometer readings and clipboards and all that tedious stuff. All you do is click on Start Mileage Tracking. You'll then have a little pin that follows you around. When you get to your business destination, you click Stop Mileage Tracking. It'll automatically give you the address, automatically. You don't type it in. Automatically give you the ending address. Automatically give you the date. Automatically give you the mileage. In Canada, it gives you the kilometers. Automatically do a round trip if you want, or you can turn that feature off. All you type in is Y, save it. It goes up on the web. It summarizes your mileage, and then at the end of the year, you press one button, Reports. You can download the business versus personal usage. It will actually summarize and can calculate that for you on your hard drive. It's that simple, and then you can send it to your accountant. Now, interestingly, TaxBot also has, which is something really cool, in the front of TaxBot, it shows in real time how much deductions are generating. This will not only serve as a tremendous motivator for you, but every major leader I know is putting as many of their downline on TaxBot as they can get. Why? Because TaxBot generates somewhere between $1,000 and $3,000 a month in deductions. If you're generating $1,000 to $3,000 a month, do you think you're ever going to quit? Because this is what it costs you if you quit the business. Attrition has gone down enormously. Like this is a sample of somebody's iPhone. This person generated $15,069 as of August 20th, 8 months. We're talking almost $2,000 a month here. In addition, TaxBot searches your bank account and credit cards for missed deductions, so everything will be in one place. You don't have to worry about looking at your bank and then looking at your credit cards, what were business, and everything in one place. Now, TaxBot is kind of like a BMW. There's more under the hood than it appears. We store everything in encrypted files in multiple high-security data centers, so your data is very, very safe. You also get tremendous, powerful reporting for your accountant. For example, you get a whole graph showing what you're spending on every category. You can even use TaxBot as a budget for that reason. And now what's interesting is that you'll be ready for the toughest IRS and Canada Revenue Agent audit. So while most people, this is tax time, when most people are thinking of taxes like this, and I bet you are, I'm thinking of it like this. With the press of one button, and I'm not exaggerating, I can download TaxBot to a report to my hard drive. I can then email the report to my accountant, or I can put it on a memory stick and give it to my accountant. We have found that people can generate do all the stuff they need to do in TaxBot in less than 2 minutes a day. In fact, it averages about 1.5 minutes a day. It's that simple. Now, in addition to the expense tracking and the integrated camera and the mileage tracking, you get me. You get a whole bunch of videos, 40 videos on a variety of different topics. You get 370 blogs on tax and financial topics, not just tax. I deal with things like the top scams in this country, in North America, evaluating nursing homes for, as some of the recent articles, for parents. What kind of insurance should you buy? Should you get a 15 or a 30-year mortgage? I have all kinds of interesting things that I write about. I mean, it really will change your life. I've had one reviewer say, you get one idea from this, it's worth thousands alone, just the ideas. And it's got more information than any other site anywhere in the country. You know, by be a byproduct of using TaxBot, you will find more in deductions and save literally thousands and thousands of dollars in taxes. And we're so sure about it, we're going to give you a 100% guarantee. Here's our guarantee. Try TaxBot for 30 days. We will guarantee you will get 20 times minimum of what you paid in new deductions. 20 times. That's 2,000% rate of return. Guaranteed, or you get your money back. How's that? If that's not risk-free, I don't know what is. Okay? Now, our customers love TaxBot. It has a 4.5-star rating in the App Store. It was rated #1 in North America as the best expense tracking software last year. We have tens of thousands of happy customers. In fact, let me give you an idea of who's recommending us. The real estate associations across the country, National Society of Accountants recommends us for all of their clients, New York Stock Exchange billion-dollar sales companies. Now, normally TaxBot is $19.99. However, that's per month. However, there's a special discount that's negotiated for you. It is half price. It is only $9.99 a month. That is it. This is not going to go up in 2 months. This is it. This is the price. That's only about 33 cents a day, and that's not even that because it's tax deductible. So it's about $5.40 after taxes. What does that come out to be? 18 cents after tax a day for all of this, including the mileage tracking, the expense tracking, and all the videos and blogs. I mean, that's just a steal of the century. Now, if you want, you can even save another 2 months. You can get it for $100 a year. That saves you 2 months, and you get the same 30-day guarantee. To take advantage of it, go to www.taxbot.com. That's www.taxbot.com. Click on Sign Me Up. It's going to ask you for a coupon code. You must put in the code, or it'll be $19.99 a month. The coupon code is 50 off. You actually put in the number, 50 off, 50 off. By doing that, you will get this price. That is it. Now, in addition, if you sign up in the next 24 hours, in addition to all the things I mentioned, you will get our premium service, which includes unlimited calls to an accountant. You can ask any tax question you want for U.S. or Canadian people, in addition to unlimited calls. This is all for $9.99 a month, by the way, which is tax deductible. They will give you our Audit 911 service and advise you if you ever get audited, if you ever get a letter from IRS or Canada Revenue Agency, you definitely want to do this. They will review last year's business tax returns for ways to save in the future so you can get more deductions. And all of their services are backed by a $1 million insurance policy. And by the way, for you Canadians, you get something special because a lot of my videos are U.S. oriented. For you Canadians, you get my entire tax strategies home-based business in Canada. It's developed by me and Canada Revenue Agency and Deloitte Touche. You get that as a download plus the book that comes with it for you Canadians. You get that as a digital download. If you still have tax questions, in addition to all of this isn't enough, we will be sending you a copy of our ebook after the webinar, Targeted Tax Breaks for Home-Based Business, which will put thousands in your pocket. This is all for $9.99 a month, by the way, including the unlimited consulting with an accountant, and it's fully tax deductible. Again, to take advantage of this, you want to go to, which I don't see why you wouldn't, but to take advantage of it, go to www.taxbot.com, click on Sign Me Up, use coupon code 50OFF, and you get it for this price, and it's fully tax deductible. You know, hopefully I've convinced you of the horrible mistake of overpaying your taxes, and I apologize to anyone who doesn't get it, because for all this, I must have done a crappy job if you don't get this, because this is a no-brainer to me. Hopefully I've convinced you how important it is, especially when you have a 700% more likely chance of being audited. All right, let me do this. I'm going to turn this back. I'm going to take some questions. If you have any questions, please type them into the chat section. We're going to take a few questions, maybe 5 minutes of questions. Tomas is going to read them over to me. So let's do that, and let's make everybody's life less taxing. Tomas, let me turn this back over to you.
Thank you so much, Sandy. Hopefully everybody can hear me. Glad everybody could join us. Sandy, I'm grateful for everything that you poured into us today. It was significant. I know for me and probably a lot of others on the webinar are probably thinking, man, I'm going to hire my kids now. That's one of the things that I was thinking.
Well,
and for those of us that are maybe looking to have kids, I think they're already probably putting them to work before they're even born with that new family plan idea that you planted in us. So that was great. But no, I was just looking over some of my notes and stuff that I was taking, and it was significant. I mean, some of the things that I've learned from you in the past, Sandy, and even tonight, just reminds me that a lot of us go to an ATM machine, several times to get cash out. But if we ever go to a bank or like a portable ATM or something at a convenience store, a lot of times they'll charge us if we take out $20 of cash. They'll charge us maybe a $2.50 fee for that versus going to our original bank. And I just realized, working my job previously, that's a lot of what we're doing, with our taxes and stuff and our hard-earned dollars and our hard-earned income, that when tax time comes, it's almost like there's, $2.50 being taken out of every hard-earned $20 that we've earned in our jobs. And, if there was a way to divert that in the case of all the different benefits and tax advantages you've given us and kind of laid out tonight, it's kind of like saving that dollar or maybe $1.50 back in our pocket for every $20 that we earn. So I don't know, that's what kind of made sense to me, and that's why I acted on it years ago. I'm learning a lot of these things, and so I'm really grateful. And for a lot of us that are on this webinar that might be having our jobs, I mean let's be honest, wherever we're at right now, who of us wouldn't want an extra $3,000 to $9,000 of an extra cash refund on top of what we're already receiving this year and every other year. I know I did, and I wanted to take advantage of that. And
sure.
So, especially when I was educated, because I feel like if we know better, we can do better. So that was significant. For those of you that are on this webinar that I haven't met before, my name is Tomas Artica. I'm from Southern California. I'm 42 years young, and I've been married for over 12 years now. My wife and I have twins, and prior to thinking about all these different advantages and even having a side business, or in my case, a home-based business that I've had, I was probably like many of you with a job. I've worked actually in a couple of different industries, with the majority of my my working life or my working job life, working in banking and finance for about 17 years. And I basically help people, basically save money and make money in the banking industry. But what I found was that the most financially successful people were people that really had their own business. And not only that, from a lot of the things that Sandy pointed out tonight, I think is obvious, how much extra money that they're able to keep that's not going into taxes and getting back from having a business, or in this case, a home-based business. So the home-based business that I've had with USANA Health Sciences for almost the past 7 years now, I realized that USANA is not necessarily the only option, but I think for me it was a really good fit, and for a lot of other people on this webinar, it was a really good fit when they really saw exactly how simple it was to set something like that up and take advantage of all the tax benefits without a lot of the risk involved with like conventional businesses or side businesses. And I think that's really great. But how things happened for me was basically they say you don't get serious about life until you get close to death, and that's what happened to my family and I. My wife was diagnosed with a cancerous brain tumor that almost cost her life, and everyone around me had kind of encouraged me in the health field to make sure to get her nutrition up, and realizing that not everything's the same, and not all things are created equal. I was looking for the thing that was going to be most effective on a nutritional approach to giving her her best fight for her health. And I give a lot more credit to God that she's still alive today, but I do think USANA Health Sciences played a huge and significant part in the nutrition category and giving her a better fight than a lot of the stuff that's out there. And so, because of that loyalty and that gratefulness, found out that there was a business part of that. And obviously we're not going to have time to talk about that tonight. You're more than welcome to talk to some of us that have and run a USANA home-based business on this webinar, and feel free to ask them how easy it is to set that up and be able to take advantage of all those home-based business options, as well as doing something really worthwhile and making a difference in people's lives, which I think is really significant. But one of the things that made it really unique for me looking at USANA Health Sciences as a home-based business was just that we're working with a huge expanding market. The health and wellness industry is really big and booming, and it's growing. And people are looking at that. It's coming up in conversations casually and relationally. And also what was really unique was that their product was, their quality level was not something that you could get out there. It was significantly different and, just more effective at giving people a better fight for their health, for those that have been diagnosed with something, and for those of us that are still healthy to just be able to maintain that health, which I think is really great. And the other thing, too, is we're working with a consumable item. So, when things, get depleted, customers are basically coming back for restocking that, the use of that product that they love so much and that's been working so well for them. And so that's a residual aspect that is really unique to business, because there's a lot of businesses that you can make money in, but not having a residual income base that's constantly coming in every week in most cases. So I thought that was pretty unique. But again, talk to whoever it was that invited you that might be running a USANA home-based business, and just talk to them. Ask them how, ask them to show you how they set that up to be able to get all of those additional tax advantages of running a business, and literally getting all the tax breaks like a normal Starbucks or Subway franchise owner could take advantage of, the same way we can get those same advantages running a home-based business with USANA Health Sciences, which I think is really great. So one of the things I will say, and kind of leaving you with this and getting into a question and answer session as we're scrolling down through some questions, I heard it said from a good friend of mine by the name of Jordan Kemper, and he said, I think he said it best. He says, motivation plus education is nothing without application. And I think it's so true, because I'd actually heard Sandy speak years ago when I was in college, and I took good notes, I'll be honest, but I didn't apply a lot of the basic tax education that I was learning. And so there was several years that passed that I could have been getting thousands of extra dollars a year in tax cash refunds that I didn't take advantage of. But it wasn't until I did that and literally put into action a lot of the recommendations that Sandy gave that I actually started to see that over the last few years over and over again. So that's been really significant, and the app is phenomenal. I use TaxBot. It's made everything so easy and so convenient. And for me, it was just, yeah, it was great. I mean, I continue to use it. It just simplifies things for me. Everything I have, I mean, my phone is almost always on me, as it is for most of us, I think. And so it's just really simplified the process that much more. And so that's just kind of another added benefit. But regarding some of the questions that we'll kind of take, I definitely encourage you guys to take action on these things that you've learned tonight from Sandy and make it work for you. You know, it's not going to work until, you know, you make it work for you, and that's the application part. So, so one of the questions that was asked, and I'm going to go ahead and propose this to Sandy, was regarding personal care. What is that under for Canada? For business builders who are just starting to host, you know, presentations or introductions regarding like hair, new clothes, nails tax, is that deductible?
All right, that's a very good question. The answer is no. Generally, the only way you can deduct clothing of any type is, or dry cleaning, is if you are on business travel. General, the shirt you're wearing, the suit that you wear, the pants, the slacks, the dress, none of that's deductible. Is there any way to deduct that stuff? There is a couple things you can do. One is to convert it into a costume. If I have a jacket and then I stitch on, not clip on, stitch on a logo that says USANA, at that point it becomes a costume, and I can deduct not only the outfit but the dry cleaning. Also, if you're on business travel, and this is something that a lot of people miss, if you're on business travel, which means you're sleeping away on a business meeting or business convention or whatever, away from home, you can deduct the dry cleaning and the laundry as well, not only while you're there, but your first dry cleaning bill you incur when you get back home is 100% deductible as long as the clothing got soiled there. So that's a nice little big tip for you.
That's great,
Hello?
Sandy. Thanks. The other question, Sandy, the other question that was asked was, where do you find the online library?
In the tax bot, somebody's echoing over there. In the tax bot, there is a place called Library, and I have to go on it myself when I see it. But I'm not by my iPhone. I'm up in my other room. But there's a place for library. In the library, it includes the videos and the blogs as well. There's also a place for blogs. Just look for blogs. There's a whole bunch of them. You can call our office. Our office number is listed. You'll be receiving a passcode with our office number. You call them up if you're finding out something you're not sure of. There's all kinds of videos there to teach you, but if you're not sure, just call the office. You do get a real human being, and we're on the East Coast, so be aware that we are in Eastern Standard Time.
Sandy, thanks. Another question that was asked from one of our attendees is, I understand that you said that if we've never owned our own taxes yet, or excuse me, if we've never owed on our taxes yet, this will still increase our returns as long as we are, you know, meticulous in our tracking.
Absolutely. By the way, I want to emphasize something, folks. You know, I mean, I don't see why you wouldn't want TaxBot, but you know what? It is so easy to keep track of your documentation. You don't need to fudge, and you don't need to do something illegal. You don't need to mess around. It's just too easy. For 2 minutes a day, you can do it. But if for whatever reason, if TaxBot's not for you, just do something. If you need to buy a waterproof, fireproof safe and then have a little tracking of your mileage in some other way, fine. But do something. That's really what I emphasize here.
Okay, great, Sandy. Thanks. Sandy, the other question was related to a vehicle and regarding tax breaks. Can you take the $25,000 new truck deduction in 2013 or just 2014?
Oh, that's a good question. Yes, that was available in 2013 as well. In fact, not only was it available then, but you also get 50% bonus depreciation on what's left over, which is not available in 2014. So yes, that was all available in 2013 as well.
Okay, great, because there were some follow-up questions to that as well, Sandy. This person is actually paying on a student loan. Can they do the same thing as with the tuition that was mentioned?
Well, student loans are not business interest. But in the United States, you can deduct student loans if you make under a certain amount of money, and you can deduct up to $2,500 of interest per year. That is allowed in the United States.
Okay. If you attempt to talk to the cashier, you know, as a potential prospect, can we write off some of those groceries, or does it have to be a lunch meeting?
Nice try. No, you have to have a business appointment before you go to meet with that person in order to write it off. So, for example, let's say the cashier is your next door neighbor, and she wants to, or he or she wants to, think about starting a side business. They say, all right, come on over around 1 o'clock. We'll come over to the store and we can talk. If you do that and they leave the cashier because they have a time off and you can sit on the side and talk for a few minutes, then that would be deductible, but not the groceries, but the trip there would be deductible, things like that. But normally just simply going to the restaurant and striking up a conversation with the waitress or talking with the cashier, and it was not going to allow you to write off your restaurant food or your groceries.
Okay, that was great, Sandy. The other question that came in was, can you give some more examples of deductions we can take in our business?
There's just so many. I mean, you're talking about thousands. I mean, you can write off your marketing, your advertising, your entertainment, football, plays, ballet, hockey games, breakfasts. You can, your car. You can write off either as I said, hire your kids. You can write off lease payments, and there's just so many. I mean, I got a whole book called "Lower Your Taxes Big Time" that deals with that.
Yeah, I bought that book, Sandy. It is good. It has a complete, comprehensive list. So that was really good. The other question that's coming in, Sandy, is there's someone on the line that says that they're just starting their home-based business venture, and based on what you said, we should be able to claim the time that we chat about business with someone over social media, or when we do training over the internet.
All right, this is going to be the last question because we're running late. But basically, time is not deductible. You cannot deduct your time. You only can deduct what money you spend. And if you're spending that money on social media, like you're advertising on Facebook, for example, to get business, then that would be deductible. But the actual time you're spending is not deductible. And the same thing is true of charitable work. I met a surgeon actually, who's doing a lot of charitable work for his local church. And I asked him, I said, what do you make per hour? He goes, probably about $500-600 an hour. And I said, well, what do you, if you had to hire someone to do this work at the church, what would you have to pay? About maybe $15 an hour. So I said to him, first of all, your time is not deductible. Instead, donate the $500 or $1,000 of the 2 hours that you would normally work, and that will be able to hire somebody for over 40 hours, and do it that way. Okay? So time is not deductible. Let me emphasize that.
Okay, that was great, Sandy. Sandy, can we squeeze in one more question that's been
All right, last question.
Okay. So is your auto order or your monthly quota tax deductible if it's a mandatory expense to keep?
That's a really good question. There's nothing listed in the codes about that. I'll give you my opinion. Generally, personal consumption is not deductible. However, there is a way to write off personal consumption, and that is if you give it away as product samples. If you give it away as product samples and you document that in TaxBot, who you gave it to, it was a product sample, what you gave away, the name of the product, what you spent, the date, then it becomes deductible. If you consume it personally, in my opinion, it is not deductible.
Okay, that was a good point, Sandy. Sandy, thank you so much for your time. I mean, a lot of what you poured into us tonight was great and noteworthy, and I'm just hoping that a lot of us, like myself in the past, really put into action and application a lot of the things that we learned and really use the tools that are available to us. I mean, TaxBot is really significant. I've liked that it's just simplified things. During tax time, I'm pretty much sending one upload from my phone to my CPA. And it's funny because my CPA, who does my taxes, I've brought a lot of the stuff that I've learned from you and from on TaxBot, and they're surprised because I think a lot of us that go get our taxes done, from like TurboTax or, wherever we get our taxes done, a lot of times they're just there to just do the very, very bare minimum to get our taxes done, and we're satisfied with any kind of cash back we receive. But they're not always up to date on the latest things or other things that we might be eligible for. And that's where a lot of your knowledge and expertise, Sandy, and what I've learned even on my TaxBot on my phone has really helped me get that much more. And I've actually educated my CPA and actually showed him, hey, am I eligible for this? And he's like, well, actually, yeah, you are. And I'm like, man, I was hoping you would mention that to me and not me have to educate you. And so thank you for self-educating us tonight, Sandy, and giving us the tools with TaxBot to be able to take advantage of that much more savings every year.
Oh, it's my pleasure. Again, TaxPlat's easy. You download it from somebody asked me, how do you get it? You download it from the Droid or the Apple Store. You then have to get a passcode to activate it, and it's that simple. Once you put in the passcode, it's good with no problem. But my point is just do something, folks. Seriously. If TaxPlat's not for you, which I don't see why it wouldn't, but if it's not for you, fine. Get yourself a fireproof, waterproof safe. Get yourself a system where you keep track of your expenses and your mileage, but do something. Hopefully I've convinced you of how important that is.
You have, Sandy. Now it's just a matter of us applying it and being able to put, again, that motivation and action, education basically into action and application.
Absolutely.
Once again, Sandy, thank you again so much for your time. I know it's very valuable, and being live with us and on a Q&A was really, really, it was just immense. And for those of you on the call, I hope you got a lot of value out of tonight and can really take advantage of that much more savings for you, not just this year, but every year. Have a great night, everybody. Take care.